Alright, we're here at video number 3 here. We're actually looking. Today will be August 12th, 2010. It's the 30-year bond auction. And this complete, well, it's the beginning of August, and then there's another series of contracts or trades that we'll be looking at towards the end of August as well. So, but first off, we're going to handle a 30-year bond auction, and what we need to do is actually fast forward here to 1250 mark again. So what we're going to do is go ahead and get to 1250 and see how quick that. It doesn't take long to get there, right? You're at 1250 and you're ready. You're good to go here. Looking at the 15-minute chart, and we're looking now. We need to look at the next 15-minute bar, right? So what we need to do is see what's the next 15-minute bar going to show us. So what we do is go ahead and fast forward every minute here, and then we're going to see if we have a decision here to make. There's 1, 2, 3, 4, 5. All right. What we have is a spike reversal bar. Now this can be a long signal, right? So we're going to look here. This is good. Spike reversal bar is fine here. You have green bar volume. So you could pass on this spike reversal bar, and let me tell you why. You're looking at this bar here. Look at you. Normally on a short we want to be at minus 70 or better to short, right? This bar finishes at minus 107.9, so this would be a good no trade, right? And then we can see our volume here is fine as well. So the volume's good. Now this is supporting a short signal, and this is supporting a long signal. So what we see here is a spike reversal bar. We have plenty of room to the upper average daily range, our blue line up here. But we're sitting in the middle of a trading range. That's one thing. So it's pretty much hanging out right in the middle of a trading range. If we'd pull out our trend channel and just throw this on here quickly, notice that we're right in the middle of a trend at this point. So speaking just on the particular trade, and this is a good example that I wanted to show here with the spike reversal bar. Yes, the signal here is to go long. So we have the upward arrow here pointing on our spike reversal bar. And by the way, this is spike reversal bar if you don't know what that is. It's the upward, and then if you have one on the other side like over here, this is a spike reversal bar pointing down. So you're trading to the direction of which way this arrow is pointing. So it is a long signal. Although right here, this signal here is not a good one. Now the next bar is already printed here because we already know where that CCI is at this particular time, but we notice that this CCI here is at negative 107.9. Now there should be short. Now that's a short signal. It's not a long signal. It's a short signal here. So this is you bypass. You do not trade this. You let it go. So we're going to let it go, and we're going to go 15 more minutes and see if we have anything to go with, and another at 120. One more minute. 120. Red bar. Red bar, once again, we do not trade the red bar, right? Red bar, no spike bar. Looking down here on this particular, we see we're at negative 88.2. Still, that's a short signal. So we have, if this would have closed a little bit lower, we maybe would have had a short signal to go short here. But we do not have the long signal. And we still have enough room, obviously, for profit to take on a long trade, but it's not giving us a long signal. Now, pretty much I look at the last bar I normally look at here is the 135 mark. So we pretty much keep ourselves in here. Okay, here's 135. Now we have a green bar. But look at this, green. Look at our volume. It closes blue. Blue bar volume, let's just move this over here. No trade there. And we look over here at our CCI lines and we want to be plus 70, right? To take on a long signal, we normally want to see a plus 70, and we don't have that. We're just sitting here at 12.45. Now, since it's opened up this way, we could have taken a long signal if we would have been able to see something. This spike bar would have been at minus 70 or better, or a black bar at, it would be what, minus 69. But since it's green, a green bar volume, we want to see this to be 70 or better to get in green. Now, a red spike reversal bar, we want to see minus 70 or better, so like minus 69, 68, and so forth. And a black bar we can get in at minus 69 and so forth. But a green bar, we need plus 70, and a red bar, if we're shortened, we need minus 70, right? Like for instance, if we were looking at this bar right here, and this bar right here is red, right? And this bar right here is at minus 50.89. That's not a good one. Not a good signal to be short here. So this is a no trade signal. Let's just go ahead and move forward on the rest of the trading day, because we're looking at 30 minutes into the trade itself and no signal. Blue bar volume it's pretty easy. It's an easy call, right? The volume is bad. You don't want to be in it. Just let it go. Now you're coming after 2 o'clock and pretty much don't really have enough time to be taking on any trade. See the blue bar volume? All of this is staying blue. Blue bar volume again. And we're coming up to the 250 mark, and obviously this is a no trade. 238, 40, 1, 2, 3, 4. So you had green bar volume coming here at the end, but it's too late. Too late to take on the trade. It's too late to take on the trade here. You're looking at a 30-minute window, right? You're looking at basically, I just want to show the rest of this trading day so you could see that this is what I would consider a no trade. You don't have enough information here to be able to take on this particular signal. Now, here is the spike reversal bar. It kind of be kind of fun if we would have been able to get in it. Now if we would go back here and I'd say, okay, let's get in this spike reversal bar. So let's back up here. Well, I don't want to do that because then this will throw this net profit off. It's a loss, right? So it's taken on, we would come in at 25, and 6 underneath that would be what, 19. The low is 17. So we get knocked out, minus 6 there. It goes down, knocks us out. It would take 187.5 away from our trading account. So we have some specific rules here for the spike reversal bar and so forth to help us out. Alright, so no trade here on a 30-year bond auction on trade number 3. So of these 3 trades, the only day that we could trade it was the 10-year note. 10-year note auction was our only day that we could take on this particular trade. The rest of the days were a no trading situation for these 3. Now we're going to look at trade number 4 here in a second, and that will be later on towards the end of August.